What's good, superstars? Back with another living out of my brokerage account video. Today, I'm going to go through some real numbers again, and then I'm going to let you guys know basically the cash flow diagram of what I'm doing here. It's going to be a good video to look back on in the future to see exactly what I'm doing, and we're going to see how it plays out. But anyways, we're on to month 4. I started this in September. It is now December, as you can see here. I'm not showing any monthly paycheck or expenses because we're not putting in our entire paycheck yet, and we're not paying all of our expenses out of the brokerage just yet. But we are starting to slowly increase what we're going to be doing. So I'm going to show you that. My inflation is set at 4%. So then we have 7% growth rate that we're assuming for the margin account year over year, which I think is very, very conservative. Typically, it's 10% plus if you're investing in the market. And my growth account is heavily market or index based. Even the NASDAQ, I think, has been like 14, 15% last couple of years, maybe even more than that. But anyway, and the TFSA, I'm going to assume 0. Right now, it's been a little bit of a downturn because I had been a little bit unevenly weighted into individual stock-backed covered call ETFs. I've been adjusting that as we go here into a little bit more stable things. So I think I can get that to a flat line and or positive growth maybe by the end of the 12 months of doing this, but we'll see what happens. My margin is in Canadian dollars because any money that I am taking out on margin is coming out to pay bills or whatever, and that's all in Canadian. Everything else invested, I either convert into USD if I'm buying a US account, a US stock, or I'm just buying directly into Canadian. So it'll be taken from my margin when I'm paying bills. Blended yield, this is basically, I'm assuming all American funds, which means that I have to put a 15% tax on it because I am in the TFSA. It's not an RRSP account where those taxes are waived. However, I do have a bunch of Canadian funds which don't get taxed at all, but worst case scenario, we're going to say 15%. So 26% blended yield, worst case scenario. And this is where I just show how much cash I have in the mix of the accounts, just because we want to have the proper equity numbers, and I want to include that number when I'm counting my equity. So we go down here, we're on to month 4, like I said, December. Basically, these are amounts that are invested into each account. So I have 2 accounts. I have a margin account and I have a TFSA account. Margin account I'm using for my growth because as I grow, I open up margin space. So I want that side of the portfolio to grow. Also, because if I open up margin space, I'm also going to be increasing my equity. In Canada, on Wealthsimple, we're allowed to link accounts. So I link it to my TFSA. So the value of my TFSA also counts towards margin availability. But the TFSA high is where I have my high yield funds, because if I do end up eventually growing my high yielders, when I say high yielders, it's like more than 10%, 10, 15% plus in terms of yield. I don't want to have to pay taxes on any of these distributions. So those distributions are in the TFSA. And down the line, if we ever do grow it to an amount where distributions can pay for our lifestyle, then at least they'll be tax-free. Total portfolio value adds those 2 together. And then debt is margin debt. This is taken from my account. I update it every time that I update my holdings. So right now I'm $8,290 on margin out of my 18,000. So we're around 56% equity. This takes into account the cash that I have on hand. Like I said, margin interest. This is based off of these numbers up here. And so far this month, I've put $500 into the account. I haven't taken anything out to pay any bills yet. I'm thinking to do $500 per week and see how the equity holds up. We're going to see how it goes. If it's slowing, if it's getting too low, we're going to stop putting in to take out. But anyways, the goal is to do these bills here. So last month I did $500 float. I did my hydro, my water, my gas, and my hot water tank. This month I'm going to do the same thing, 500, but also I'm trying to do my home insurance, car insurance, TV, internet, phone package, and then any HELOC and lock payments, just to get them automated and paid off with the margin. So I want to see if I can float those. That is the goal, at least, right? So maybe I should have put that under the goals tab, but that is what we're doing. Right now, this is how many dividends I've gotten this month so far. Considering that we're only on the 9th of December as I'm filming this, we are on track to, I think, surpass last month's dividend totals, but we'll have to wait and see. And we're going to just continue to reinvest those. Like I've mentioned, we reinvest those into the high yield portion, and then any additional margin that we have, that maybe if our margin gets too high, we can always invest to balance and put it into the growth side. So I want to show you guys what I've been working on. This is my cash flow. This is the cash flow chart. I hope you guys like it. I did it on Canva. I'm an artiste. I'm sitting in my car filming this, guys. I'm not a financial advisor. Read the bottom there. I'm not a financial advisor. This content is meant for entertainment purposes only. I do not know what I'm doing. I'm likely making this video in my car, as I mentioned. So let's start at the top here. Paycheck deposit. So I'm not putting the whole paycheck in yet. So the deposit comes from my paycheck. 60% goes into the growth. 40% goes into the high yield. So the growth is my margin account, like I said. The high yield is my TFSA. So 60% here, 40% here. I further subdivide that into single stocks, indexes, and commodities on both sides. I have holdings of those three categories on both, and I have percentages I've shown in a previous video. If you want to go check those out, you can check that out. Or in the next video that I do on this account, I'll probably show you guys my holdings and the percentage breakdowns and all that, if that's what you want to see. Any other deposits that I get, if I get whatever, somebody gifts me $200, whatever, I'm going to be putting that into the growth side. This is going to go directly into the growth side, and that's it. It's going to pay down the margin / going to be invested. We're going to figure out what the goal is. It's always going to be dependent on what the equity is at, because if you look at the bottom here, maintain 50% plus equity. That's the goal. So TFSA, this has the high yielders. Any distributions, they get reinvested into the TFSA. So it's just going to be a cycle. Keep building those distributions, hopefully. Margin side, okay? We're going to be paying bills. But this is the catch. If I put in $1,000 from my paycheck, I'm only going to be paying bills up to 70 to 100% of the value. So obviously 100% would be $1,000 worth of bills. But early on, typically it's going to be lower to be able to grow this account and get enough space spread to be able to be continuing to do this. So I'm thinking up front, maybe using 70% to pay bills. So if I put in $1,000, pay $700 worth of bills, I got to float that $300. Hopefully helps grow it, grow some more spread, and helps for the next month to add in another bill maybe. We are aggressively doing it early on because last month we were a little bit timid. Wanted to see how it works out, but this month going to try and do a little bit more. Like I said, last month $500 floated. This month maybe $2,000 is the goal. Maybe if I do $2,000, that means I can pay off around $1,400 worth of bills. We'll see what happens. Then this other line here is margin. If I grow, if growth opens up margin, I can always invest more into the margin side, as long as I'm maintaining my 50% equity. So this is the cash flow chart. Hopefully I made it simple enough. I don't want to make it too crazy, too difficult, but this is the cash flow chart. Maybe I'll start showing this every video if you guys want to see it, just as a reminder of what I'm doing here. This is what I am doing. This is not what you should do. You should not copy someone who is in their car making videos. This line here in the middle shows that these two are linked in my Wealthsimple account. So that means that they both combined allow me to access X amount of margin. So they are both combined. They're both working together to maintain 50% equity. It doesn't have to be just what's in my margin account to maintain the 50% equity. You guys let me know what you think. Did you enjoy this video? Are you guys doing this? If you're doing this, let me know in the comments if you're doing something similar to this. I'm not the first one who is trying to live out of their brokerage. There's so many YouTubers online that are doing this type of thing. I'm one of the few, I think, that's showing the buildup on how I'm trying to get to that point, because I don't think you can just jump in and do it right away unless you have a really large portfolio with a lot of equity. It's a little bit more difficult to do that. If you're just starting this out and you want to figure this out, this might be a good way to follow along. I don't know if it's going to work out. I'll be honest with you. I don't know if this is going to work out, if it's going to get called away in a margin call, if there's going to be any crazy stuff. I'm trying to be a little bit safe with the 50% equity, but you never know. First time that I'm doing this, and so far it's been fun. It's been enjoyable. It's been keeping me occupied, and it's just been a lot of fun to track. So guys, I hope you enjoyed it. If you did like it, smash the thumbs up button. Subscribe to the channel if you're new. If you're watching this and you're not subscribed, what are you doing? Subscribe. Make me smile. I'm in my car filming. Make me smile, guys. We'll see you in the next one. I love you. Bye.